Welcome to Bears in Exile. Today is Wednesday, September 26th, and this is the market overview. Looking at all kinds of stuff. I'm going to go into a few things that I normally don't, and it'll be all kinds of fun. Alright, well, yesterday we had the downtick move complete on so many things, and by the rule we have to see what happens next, and it happened to be red. New recent low, not taking out the big green candle as of yet, but still a very negative sign. Beyond that, crossing the middle Bollinger Band, overall looking negative on the daily. Zooming out a little bit, we can see, yeah, we do have the 14-day RSI moving average still moving up, but we're going down on the CCI, the stochastics, the RSI, the histogram, and a bearish cross on the MACD. Overall, looks very poor on the daily. This could be a secondary reset where everything goes to the bottom, turns around, goes up to meet the 14 days, as long as it hasn't turned by that time. But if that one flips, big trouble. Still a little bit too early to know for sure what that will do, but overall, very poor looking. Which isn't to say that there can't be a bounce tomorrow or whatever the case may be. Personally, I don't know if I trust the move down past this weekend. That's just my take on it. Gives them a weekend to gloss over whatever they need to gloss over and start a fresh week with optimism. But beyond that, what would be natural at this point? Well, what would be natural is a catch here, or a catch here, or the major price consensus level just below 13,200. So 13,200, 13,253, and 13,325. Those would be the three places I really would be looking for a catch, and I don't know which one it would be, but negative. And beyond that, what else can we tell? Well, we know that all this looks negative. Something that is really important is a lot of people, the bulls, probably Bernanke, say this is probably overdone. We have 4 days in a row to the downside. It's time for a bounce. The bounce is going to take it, all crazy. Which is entirely possible. But this is very risky at this moment, because if we look at the volume inside of what's happening, we see that there is some very troubling developments. The two most important things inside of volume is the accumulation distribution and the on-balance volume. Up until a few days ago, everything was green. And now what we have is a potential cross of the accumulation distribution, and we are getting a cross with on-balance volume. We aren't really in a big danger zone with the volume price trend, or, well, we are a little bit of in danger there, or the volume weighted MACD, or the dual volume flow, but the two biggies show that potentially there's a really nasty little effect that could come out of this. And just to show, when's the last time we had a red accumulation distribution? It was back here. Unbalanced volume here, accumulation distribution here. And actually that didn't catch, that only caught part of the move down. So maybe that's not a good example. But typically, when you have those two go together, it's a really bad sign. And yeah, there's something wrong with my feed going back here for some reason. I'm sure I'll have a better example here in a moment. And beyond that, I mean, there are some things here which the bulls can hang their hat on. I'm not saying that it's a done deal or, you know, it's the end of the world, this is the big crash. If we look at price pivots, we know we have a pivot high here. We know we have at least a low pivot here. And if we look at this high pivot, which coincides with this high pivot, there should be support there. And that is at 13,330. Almost 100 points to the downside from where we are at the moment. It almost coincides, and probably would at the time, with a bar retest. So actually we have this, which we stated earlier, which actually coincides with this other high. That would be a very natural place for it to catch a bid. I would imagine it would take a couple of days to get down here. One of the reasons why I don't trust it beyond the weekend. But if that were to fail, which would be a really horrible thing for the bulls, then this level right here and major price consensus level. So something, I mean, we're really in a dangerous spot, and just the way that this thing looks is how it normally looks when it wants to go down for a bar retest after failing, after completing a bubble corrective move. And that you can see all kinds of different times. Normally when a bubble corrective move continues, it turns into a bar retest. So anyways, I guess I shouldn't spend too much time on that. And beyond that, beyond all the secondaries, the heat map has worked itself out of a topping area. Notice we do not have a bottoming area yet either. So, danger area. And the last couple of nights we've looked at the Dow Jones transports because they had gone in front of everything else. And we had looked for a move up. We had looked for a move up here, which we did get, and then it crapped out. Today, making a new recent low, I do believe. Or was it a double bottom? Oh no, I'm wrong. Double bottom. And not a strong looking candle. It is a hammer, possible reversal signal, but we have a blip in the heat map, not as quite as extreme as on this day. We have the 14-day RSI moving average moving down, stochastics holding low, CCI moving down, RSI moving down, histogram moving down, MACD moving down. Everything looking a little bit extended in the stochastics and the MACD histogram, but overall everything's still pointing down, so have to take that into full consideration. Beyond that, we do have some wobble, we do have some excessive separation, but we do not have an uptick. So is it time for this thing to bounce? Yeah, maybe, but we don't have any indication of that as of yet. It would just be a guess. Now, beyond that, this is different. Looking at pivot points once again. Have a low, have a high. The high, you could call it a double top. It's pretty much right on the money. You don't have a real body close above this high. So, well, at least the shadow of this high, I should say. So that is not a good sign. Beyond that, we now definitely have a lower pivot low than this one. And it actually exceeds this pivot low here. Certainly does. Which would mean that the only pivot low, the next pivot low that it would have to take out, challenge, would be this one right here at 4,800. And that would be pretty nasty, but looking at this, yeah, it's definitely possible. This is just going sideways. So that is negative. And if this does lead or predict the Dow as a whole, then this does not bode well for the market as a whole, at least not in the intermediate term. And you could pop up here, make a lower high potentially, and then go down to challenge this. But anyways, just something to look at, just something to consider. Don't mean to be a doomsayer. And if we look at this, volume at price, Dow Jones Transports, where are all of the major price consensus levels? They're all up here. All of them. What's below them? Not too much. A couple little areas here, here, here. All of those are above where we are now. They coincide roughly with a lower price consensus level for this month. So if we do get a pop, if it does decide that it wants to get a higher low, where would it go? It would go right here. And that would be a major lower high pivot, and that would be ugly. I mean, that's a good move up from where it is now. But in the big scheme of things, overall, it is bad. Now, this is very interesting. If we look at the internal structure of volume for the Dow Jones Transports, what do we see? Volume price trend, red. Accumulation distribution, freshly today or yesterday, red. Volume weighted MACD, yes, there is some whipsaw, it's red. On balance volume, the other two major one to look out for, red. And the dual volume flow, red. 5 reds. Internal structure of volume for the Dow Jones Transports is terrible. So, pop, is it going to be a higher high? Very unlikely. Could we bypass getting a pop at all? Absolutely. Something to consider. And SPX. This one is actually doing worse than the Dow. Today it exceeded the entirety of the big green candle. That is busted. Did not catch it. Almost touched for the long-term moving average bar, which should provide some support. Notice where it lines up. It lines up with this area right here, which we stated previously would be a place that it should be caught. And it did bounce a little bit off those general levels. Beyond that, difference from the Dow. Moving down on the 14-day RSI moving average, unlike the Dow. Down on the CCI, down on the stochastics, down on the RSI, down on the histogram, down on the MACD. All negative. A very poor daily chart. Maybe they can do some magic tomorrow, turn this around. But as it stands at this moment, poor. Now I'm going to jump to SPY for a moment. I know some people use this more than SPX. I prefer SPX. But SPY, I'm only doing it because I don't have volume information for SPX. SPY could have been caught here, could have been caught here, and look at that. It closed below it. Busted that out, made some penetration into the long-term moving average bar, closed inside of it, negative. Everything pointing down just like SPX, but the reason why I switched to this is the internal structure of volume. Now, unlike the transports, you don't have 5 reds. Matter of fact, you don't have any reds. And then you might say, well, then why are we looking at this? Well, here's pivot top, which should be the area where it should be caught when we're just like when we were looking at the pivots on the other chart just a moment ago. And look at that, shadow high, and that's exactly where it bounced. Very interesting. That means that this is on the precipice of perhaps breaking this and falling, in which case you'd be looking right here at 140. But beyond that, internal structure of volume. Volume price trend ticking down, getting close to turning it into a red. It has a little bit of distance to go. If this catch, though, fails, this will probably turn red. Accumulation distribution channel, very similar, very close to its trigger point. That would be a big deal if it were to turn red. Volume weighted MACD, heading right into the trigger. On balance volume, Big Daddy. Notice this, its peak right here. That's where everything started to turn and turn to crap. Right there. That was the last, sideways green day, possible bullish consolidation. And when it turned down, that's when the market crapped. What is it doing? It's heading right for the trigger line. This turns red, very bad for the market. Dual volume flow, it's turning down. And it still has some space before it hits its trigger. But potentially, if you break this pivot high, you could have 5 reds in very short order. So, are things healthy? Doesn't appear to be. And if we look at the price consensus levels for the previous 5 months on SPY, what do we see? We see we have a whole lot of nothing, and it isn't until just above 140, which coincides with about this level, that you have a major price consensus level. So if you break this, what's going to catch it? Probably not until this point. Yeah, I mean, this is a pretty strong block, but the biggest area is right here just above 140. Something to consider. And it's not a guarantee that that's going to happen. It's just about examining what data is available. Now, moving on to the VIX. Very interesting. VIX had a strong day today. It actually gapped up a little bit and just pushed right on through the long-term moving average bar, closed above it, closed above the upper price consensus level for this month, finally working its way out of a bottoming area. Everything is moving up, and even the 14-day RSI moving average is leveling out. Perhaps it will turn back up. We just don't know yet. But overall, a very positive daily chart for the VIX, the best it's had in a while. And what would be the next natural level for this to go to? Right here at 1730, and even more right here at essentially $19. And there's a gap to fill here, and there's a gap to fill right here. That would be natural and healthy. So good for the VIX, bad for the market. TNA. Alright, this is has been beat up pretty good, losing $9, $8 the last week and a half. We have our downtick on the 14-day RSI moving average. Bad sign. Everything else moving down. Bearish cross, whole 9 yards. Indicator-wise, this looks awful. Looks awful. This area that was support, busted out today. The only thing it has going for it at this point is long-term moving average bar. Should be some support. Notice it penetrated it a little bit and backed off. It did its job. The question now is, does it bounce off? Does it sit? Does it penetrate? If it sits or it penetrates, 56 would be the area. And if it bounces off, well then that's actually extremely bullish. So I have to see what happens next. But we had the downtick target. No, that was already met. I guess we've just been waiting. Well, anyway, that is what it is. I don't know what that is, so I'll get rid of it. And yeah, got to see what it wants to do next. But oh, I've got an idea. Internal structure of volume for TNA. On balance volume, heading for the trigger line. Volume weighted MACD, headed for the trigger line. Woo! On balance volume, right at the trigger line. Dual volume flow, headed for the trigger line. And a downtick on the volume price trend, heading for the trigger line. Overall, not bad, but they're not reds yet, so I won't count out the bulls. But danger zone, absolutely. And as a matter of fact, looking at this sucker right here, where is all of the buying? It's right here at 56. And then there's a lot at 54 and just below. In fact, go back a few more months. See that? All lines up. 56. So, does that give us an indication as to what could happen next? Yes, I do believe so. And in the bulls corner, pivot high new, potential pivot low, and really not one until right here at 58.60. But what's this? The next one right after that, 56.08, right into our level. Could be caught here, and that's a major one right there. Fascinating. UUP. Alright. This one's pretty cool too. Had the second uptick. It was met today. Boom. That was, let's see here. That was on this day. 1, 2, 3, 4. And 4 is the number 1 through 4. Got it on day 4. How about that? Upticks work, downticks work. Beyond that, with the exception of the 14-day RSI moving average, everything moving up and getting a MACD bullish cross. How about that? Not the prettiest candle, little gravestone doji, top of a possible range, possible bear flag. I'm not counting out the bulls yet. This could turn out really, really bad, but this can also be on its way up to the long-term moving average bar. It would be very bad for the market as a whole, and at this point we just don't know. With the uptick target met today, the rule is we have to see what it wants to do next and take everything in their entirety. Now I do believe that the volume on this does not agree with a great deal of other things. Currently they are all reds. Red, 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 red. Considering what has happened, yeah, they should all be reds. Now, what do we have? Do we have anything that's looking for a cross up? Volume price trend? Nope. Accumulation distribution? Barely. Volume weighted MACD? Barely. On balance volume? It's kind of meandering its way up. It's not in any danger of changing at the moment. And dual volume flow? Barely. So we do not have a good indication, volume-wise, that this sucker is about to make a huge run. So, that is good for the bulls. Weakness in the dollar. And it's going to be such a huge, I mean, at this moment the dollar is fueling everything, so we'll see. And USO oil, another new low today, new recent low, going right into support, right into the teeth of support and bouncing. Also almost coinciding with the major price consensus level from the previous month, this should offer significant support, and that is good for the bulls, no doubt about it. Everything is moving down. We do have a blip in the heat map. There could be a bounce here. There probably should be a bounce here, and that would be good for the overall market. Everything is ticking down, but that's a great support level. Right at it. And comp Q the NASDAQ. Very interesting. We had the downtick target met yesterday and the day before. Actually, just the day before. Got a very negative move yesterday. Continued today. Has made penetration into the long-term moving average bar. Significant. Closed inside of the long-term moving average bar. And is right into the teeth of support at this level. I don't believe that it is major. It'd be much more natural to go down to the major price consensus level for the current month, but I guess that remains to be seen. Everything moving down. Indicator-wise, this is very, very bearish. But we are at the spot, the long-term moving average bar, where you could have a bullish bounce. So something to be aware of, but certainly this is also danger zone. Moving on to Apple. Apple is getting kind of beat up at the moment. Well, beat up for Apple. I mean, that's a lot of things would love to act the way that Apple does. We've been noting the 14-day RSI moving average going down this entire time, along with everything else. Everything is heading lower. This looks bad in the daily, indicator-wise. Closing inside of the long-term moving average bar, it is a spinning top indecision candle right into the teeth of support. Major price consensus level. Pierced, bounced. Very positive. Now, if we look at volume at price, what should Apple be doing? Well, look at that. It is right into the teeth of support, just like I said. And if that happens to break, maybe it would, maybe it wouldn't. I really don't know. Next level is right here, stretching up that entire block, coinciding essentially with this block here. Lower price consensus level. This is at 636. If this breaks, we don't know if it will. And if we look at the internal structure of volume for Apple, green, 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 two reds. Volume price trend slowly inching down towards the target. Very slow. Nothing really to see there. Accumulation distribution going sideways. Plenty of room between it. No danger there. Volume weighted MACD. Negative, but not majorly so. But look at that on balance volume. At its angle that it's going right now, that could turn into a red, and that's a major sell signal. If that turns into a red, dual volume flow already red, and actually pretty decent. So definitely not the end of the world for Apple as of yet. Is it in danger? I would say moderately. And GE, this one has been so much stronger than the Dow, even holding up better when the Dow was doing poorly. And once you know it, today it did not fulfill its downtick target. Came really close, 10 cents, but just has not done it. Has another 2 days to fulfill. Beyond that, everything moving down with the exception of the 14-day RSI moving average. That sucker turns, bad news, but look, it is still pretty darn strong. That is good for the bulls. It leaves open the possibility for a secondary reset, but I guess we'll have to see if we get a downtick fulfilled and if it continues, but just too early to say. Certainly lots of weakness. We just don't have enough information as of yet for this to be a tell. Very interesting that if this does turn poorly, that the Dow actually leaded GE. But I would expect that this would bounce before the Dow, especially with all the strength that it's had. Just my guess. And JP Morgan, most important bank. It fulfilled its downtick today. Boom. It did it in 1, 2, 3 days. How about that? The rule says we now have to see what it wants to do next. It is a spinning top indecision candle. Have to see what it wants to do next. It has worked off its topping area in the heat map, and most things are ticking down, but not with serious conviction. This is a mystery. We need more information. Would the information come in the sense of volume? We have 5 greens. We don't have really too much danger of these turning red yet. That could change rather quickly. On balance volume, accumulation distribution. Well, they're all semi-questionable, but nothing as of yet. I'll be watching that one really closely. You'll notice too, we don't have any serious support until down here at 37. Very interesting. This one could be a big turn. And XLF, the financials as a whole. Yeah, look at that. Had that downtick resolve itself on, because that would be Monday. Continued with red, bearish engulfing. And true to form, continued down. Getting into the long-term moving average bar slightly. And barely beating this support level. Very interesting. The next area would be all of this. And the major price consensus level. It has worked off its topping area in the heat map. And everything is moving down. This looks very bad. Although we are getting a slight tick up in the fast stochastic. I'm actually semi-intrigued by this. Look at this. We've got a red today on the volume weighted MACD. That is the most choppy one, so it shouldn't be trusted. A lot of whipsaw. But accumulation distribution, possible problem. On balance volume, definite problem. Major warning sign. That could turn red tomorrow. Down on the volume flow, dual volume flow. Down on the volume price trend. We could have 5 reds in very short order on the banks as a whole. That would be very poor for the market. And volume at price, very obvious at this level right here, just 15.15, coinciding with some significant levels from a few months back and this last month. So broken support, next support, and following support. Very interesting. Another reason why I don't trust the down move through the weekend. Could have some more, could look really bad, could come back at support come Monday to a whole different world, and it bounces. Heck, it could bounce tomorrow right off the long-term moving average bar, but if it's bad, if it continues to be bad. And I think that that's about it for this evening. Oh, GLD. Why not? Had the downtick on GLD. It was resolved today. We have to see what it wants to do next. It is a hammer, possible reversal signal at the bottom of a small range. Maybe it could reverse. Everything is moving down. Bearish cross on the MACD. Downtick, first day downtick on the 14-day RSI moving average, the whole 9 yards. Topping area in the heat map still. This, except for downtick being resolved and the candle, this looks poor as well. Just out of curiosity. Wow. Somewhere between 160 and 162. Matter of fact, just out of morbid curiosity, internal volume structure, it appears to be attempting a rollover. It's not overly strong. Still has some time, but I don't know. Something to ponder. It really is. Man, 160 would take it all the way down to the 200-day moving average. That would be pretty insane. I don't know how it would accomplish that, but it is what it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.